activities in the Treasury bills market have been quiet today ahead of the Central Bank of Nigeria's T-bill auction tomorrow. Traders at Citi Bank say that activities are yet to pick up from the bullish sentiment seen in the first quarter of the year. And I have Tunde Adama, the head of trading at Citibank Nigeria, joins me now to get a sense of what's playing out on the markets. Thank you so much for your time on the show today, Tunde. And I would like to first get a sense from you how you see the market playing out this week.
Well, I think the market is going to remain pretty cautious. We are seeing the market trading sideways this week as the liquidity that we saw in Q1 reducing. In Q1, we had about 2.6 trillion in liquidity coming to the system from OMO maturities, bond maturities, and and bond coupons. This quarter, that number dropped to about 25% of what we saw in Q1. Because of that, we've seen the aggressive demand that we saw in Q1 reduce significantly, and seeing a lot more offers in the market and the demand being less aggressive. Because of that, we've seen yields sort of inch up, especially at the short to medium part of the curve. At the real short end of the bond curve, for example, we've seen about 70, 80 bips move upwards. In 2025, which is being offered this month, we've even seen over 100 basis point moves there. At the middle of the curve, we've seen 20 to 40 basis point moves at that point. And because of that, market has actually been trading with low volumes, trading sideways, and we think it's probably going to remain until tomorrow. We do think that demand at tomorrow's auction will be sizable, but what happens with regards to yields will be largely driven by what happens at that auction. So market is looking for the next real market indication to show what happens next. It's also a short week. We have Easter coming in end of this week, early next week, so I don't expect aggressive activity in the market.
All right, but we're also expecting some liquidity to come in this week, and how do you think that's going to play out and impact the sentiment?
Yeah, so the money coming in is the 40 billion in OMO maturities, for example, would mean that tomorrow the demand at the T-bill auction will be robust. But people will not be going as aggressive as they used to. So we do think that yield at the auction probably comes around where market is or slightly higher. And of course, if it comes slightly higher, then market expectation will be the same. People who are looking to buy in secondary market will be looking for better bids. So there is some liquidity, but it's much less than what we saw in Q1, and that's part of what's affecting it.
All right, but for the Naira, though, what's your outlook?
I don't think much changes for most of this year, to be honest. It's a pre-election year. We're already starting to see things heat up. Nobody wants to be seen to be aiding or affecting one candidate or the other. Because if you do make any changes to policy, before it stabilizes at an equilibrium rate, some moves will happen. And for that reason, I don't think much changes in Naira policy. I think rates will be about here. Even if there are any adjustments, there won't be major adjustments. I don't think we see any major policy pronouncement or changes till after next year's election.
All right, but today, looking at how corporates have been tapping into the debt markets, though, we've seen quite a lot of activity in that space. Recently, we've seen the Dangote Cement Series 2 bonds come up. We've also seen Presco as well with that 34.5 billion issuance, and MTN's twin commercial papers as well, and still some others in the work as well. How would you rate the market now for corporate bonds?
Yeah, I think it's been positive. As we started sort of normalizing after the COVID crisis, we have seen a lot of the top corporates coming in to tap the market. Yields, have been much lower than we had pre the crisis, and so this is a good time for corporates with great credit to come into the market to try and raise some long-term funding, and that has happened. And you've seen the market also being quite interested in those offers and all. So yeah, I don't expect that to change. People are also looking for yields. With yields being, yields in the market right now are less than inflation levels, so the real returns are negative. So any top tier corporate who comes into the market to issue paper and gives people a spread above where the sovereign is, I think you'll find some interest there. So, and it's good also for the corporates. They're able to borrow long term, especially those borrowing bonds. There are some commercial paper issuance is there, but being able to tap the market and raise the liquidity you want in good size. So I think it's good for both the market and for the corporates who are trying to raise their liquidity.
All right, then Tunde says it's good for the market and for the corporate. Tunde Adama, the head of trading at Citibank Nigeria.